Thanks, everybody. Thank you, Scott. Thanks to all the board members, current and past, that I've seen tonight for coming and joining us in this conversation about revenue generation. So tonight, I want to go over a little bit about the format, and then I'm going to ask our panelists to introduce themselves. Tonight is all about learning about the revenue packages that are in play. And there are a lot of them. Garrett, where'd you go? There you go. I wanted to put up this on the screen. This is something that was circulated by Oregon Business and Industries. And this is the reason why we're here tonight. These are the packages that are in play right now. And cumulatively, that's $5.67 billion in new taxes in the next biennium. No, it was this year. So what does that mean? It's about a 40-some-odd% increase in taxes. So there's a lot in play. Not all of these things are likely to get through in the same year. But we did want you to know that these are the discussions that are happening. The flip side of this number, when you look at all these different categories, is there's different things they're trying to accomplish with this money. And we want to talk a little bit about the budget process, about what our deficit actually is. Why do we actually need to raise more money in a very, very high revenue year when we have some things that are pretty daunting facing us as citizens of this state and in businesses in this state? So how do we address those? Trying to give you the 360-degree view of how we budget, why we're raising new revenue, and what are those implications if all of these pass, or if any of these pass to you as a person, and mostly you as a business owner, employer, or employee. So that's what we're here to talk about tonight. So with that, I would like to turn it over to our panel and have them introduce themselves. And Jeremy, I'm going to start at the far end and work this way. Some of these faces might be a little familiar to you. Go ahead, Jeremy.
Great, thanks. My name is Jeremy Rodgers, and I'm the Vice President of the Oregon Business Council, OBC. OBC is a statewide business association. Our members are made up of some of the larger employers in the state, and generally the CEOs or highest ranking officials of those companies are sitting around our board table. And we, a lot of people call us a think tank. We sort of work on the big picture issues facing the state from the perspective of what it takes to grow the economy in the long run. And for the last few years, we've been very, very focused on the issues surrounding the state budget, because these issues around our education system and how we pay for it, the PERS costs that the state's facing, our healthcare reform efforts that we've made, and how do we pay for those and sustain that, and then the tax policy implications of trying to do all of that and to come up with rational solutions to balance the needs of the state is something that we see as pretty part and parcel to the health of the business community and environment over the long run, and something we don't figure out soon, the consequences for the business environment are going to be severe, and if we figure it out the wrong way, like Measure 97 a couple of years ago, those consequences are also going to be very severe. So we think this topic tonight is very important, one that we're very focused on, and I'm very pleased to have been invited to be here. Thank you.
My name's Eileen Kiley. This is my second time being here. The last time I appeared here, I was a candidate for Oregon House District 53. Two of us at this table are not at Salem. We hoped we would be at this point. Prior to that, I retired in 2015. I was a controller for Daimler Trucks North America, which is the largest truck manufacturer in the United States, and part of Daimler AG, one of the largest companies in the world, where I worked on issues like global supply chain and told one of those guys who sits around your table how he was allowed to spend his money. So it was a fun job. And I'm here tonight to talk about how we managed this topic in the corporate world, and also talk about some of our issues with our crazy budgeting process in Oregon, it's a little more complex than, okay, it's a lot more complex than in the business world. And so these are things for us that we need to talk about, because ideology doesn't solve these problems. Dollars and cents solves these problems. Our budget is a statement of our values in dollars and cents. And when we talk about that, we talk about what matters to Oregonians and how are we going to get it accomplished.
Thank you.
You're welcome.
I'm Newt Bueller, former state representative and now happily unemployed, I might add. And I'm very happy to be here. Katie, thanks for the invitation, and I look forward to a robust discussion.
That's as much as you're going to say. It's early. It is early.
Succinct, concise.
So I'm Wes Price, a very tired CPA. When Katie made the call and said, so April 9th, we're going to have this tax talk, I said, April 9th? You can't do it like in May or something like that. And, after about a 30-minute conversation, she said, okay, you need to do this. And so I said, okay, I'll do this. But this is my 40th tax season. So I've seen a lot of things over all these years, and there's some interesting observations about the interaction of how Oregon's effect is different than what the U.S. tax code effect was. Because I'm 95% through a tax season. Yeah, I know there's only 5 days, but there's still 5% left to get done. But the point is that I think there's some differing outcomes than most folks think about how the federal tax code, as it was adopted and reconnected during the short session, is affecting taxpayers right now.
That's for sure.
There I am. Okay. Thank you to each of you for being here tonight, and we're going to keep this rolling along. I want plenty of time at the end of this for you folks to have an opportunity to ask questions, because I already know there are several out there that are just waiting to be asked. So here's the format for tonight. We're going to start off by talking a little bit about the budget process. How do we pay for stuff? Where does it come from? Legally, where can it go to? And what is the process in making these decisions? How is it constructive? And then again, what is the rulemaking after the budget is passed? How does that influence how the money is distributed? Next, we're going to talk a little bit about what is the deficit? Why have we been talking about how much money that we're going to owe over the next 20 years or so for PERS, for Medicaid, for education, and fully funding it? And then lastly, I want to get into the weeds a little bit with you on what pieces of legislation are at play right now. Cap and trade, it has many names. I just call it cap and trade. It's a carbon tax, a VAT, value-added tax, a CAT, meow. It's a commercial tax, activity tax, value-add tax, a gross receipts tax. A lot of these things have not been decided, but at the end of the day, there's going to be a significant increase, most likely proposed, for business-related transactions. So I want to get into that a little bit, about what it might mean to you as a business person and what kind of revenue that they're hoping to raise. So let's get started. What I'd like to do is start with the first part. I'm going to let you guys, I'm going to go up and down. You can choose to pass if you want, Wes. And I want to talk a little bit about how the budget is formed. How, and Eileen, I'm looking to you for this, because I know you and I have talked a little bit about how money is raised and legally binding the state and how it is distributed. So could you start us off, and then Newt, I know you have a lot to say about that as well.
So in our infinite wisdom, Oregon has put many, many rules about how we're allowed to spend and raise revenue. Some of these were passed by the legislature, some were passed by initiative petition. So when we talk about our legislative budget, which for the biennium that we're currently in is about $76 billion. Our revenue is 4 buckets, the smallest of which is the lottery, which is $1.5 billion bucks. And the next smallest is the general fund. And the lottery and the general fund are sort of spent together, so they're really kind of a bucket together. The general fund is 87% individual income taxes, 6% corporate taxes, and then there are some other taxes that, excise taxes that count in the general fund as well. For example, cigarette taxes come into it. Out of the general fund, we fund what I think most of us would say are the 3 most critical issues of the government, which is education, health and human services, and public safety. The majority of their budget comes out of the general fund, which is 86% individual income taxes, 6% corporate, okay? The next largest bucket is federal funds, and these are funds that come to us from the federal government, which we have to provide certain matching dollars, sometimes out of the general fund, sometimes out of a special use fund. And that can only be spent on issues that the federal government says we're allowed to spend it on. So when we talk about Medicaid, that comes out, those are federal funds that we match. When we look at something like the overpass down in La Pine, which drives me crazy, that money could have been better spent in many ways in Oregon. Unfortunately, legally, it could not have been spent on anything else but that in Oregon. And then the final bucket, which is the largest bucket, is special use fees. For example, our fuel taxes. And when we raise those funds, they can only be spent for a specific purpose. So we can have significant waste in the Department of Transportation and not be able to take that money and put it anywhere else, because that's the way we set it up as Oregonians. We're very, very careful about how we want the legislature to spend our money. In some ways, that makes us penny wise and pound foolish. So when we're talking about the education fund, why it is so important for us to raise corporate taxes is because that is where we need money. I mean, we need money for our education, we know this. And where we have room to take that is either we have to create a whole new special use tax or we have to increase our corporate taxes. Because I'm of the opinion that individuals are carrying quite enough of the load. And it's time for our businesses to share that. From a business perspective.
So before you move off of that,
Okay.
no, there's a really important piece of that whole equation. Nowhere in what you just said is the fact that of the 87% of the money that comes from individuals, at least 50% of that is from pass-through businesses.
It is.
And small business owners.
It is from small,
So
it is small businesses as well.
when you talk corporate tax, are you talking business or are you talking something else?
I am talking about corporate taxes,
Yeah.
which is,
Unless-
it can be as low as $150,
Okay.
or it can be corporate income. And a lot of it depends on how you recognize your income.
Right.
Because some of the largest consumers of services from the state of Oregon, for example, my company, Daimler Trucks North America, we invoiced very little in the state of Oregon. I mean, what we invoice is what comes out of the Portland plant, which is our smallest production plant. So despite the fact that we have thousands of employees and we're using all the services of Oregon, when we talk about Oregon income tax, we're talking about that portion that is invoiced in Oregon, which is very small. When you talk about Nike, which is consuming huge amounts of services, in particular from Washington County, of which they are unincorporated Washington County, I believe. I believe they said they'd move out of the state if we made them be part of Beaverton, because they didn't want to pay Beaverton taxes. So they're consuming, but their taxes are very low because you invoice, the point of invoicing is not in the state of Oregon. And that's a challenge. We have companies where their brain trust is here in Oregon, but the production and the invoicing is in another state. And it makes it difficult to tax properly.
Thanks, Eileen. I'm going to ask Newt if you could share a few perspectives, having been in the trenches so well for us for so long, and also if you could talk a little bit about the legislative process that goes along with this.
Yeah. Well, I'll try to avoid the polemics of, corporations don't pay their fair share, and just go through the process that I saw in the legislature, at least the official process, and then I'll maybe give you insight a little bit to actually what happens. So my first comments will be centered around what's written down is how the budget process is supposed to flow. It really starts in the first of 4 distinct stages. The whole entire state budget is really predicated on what's been spent in the past, and that's called the current service level budget. So basically, instead of what you do as business owners and you do a zero-based budget, what the state of Oregon does is say, okay, what did we spend last budget cycle? You amp it up based on the number of people living in the state, the population, and then an inflation factor. Now, of course, they don't use the inflation factor of CPI. It's called a producer index.
Yeah, it's a production index.
Yeah. So when I saw that when I was on the House Revenue Committee, I said, "Wow, I've never heard of that inflation factor." And so I started digging around and doing a little research. Well, the reason they use that is because it's typically 1 to 1.5% more than the CPI. So it already starts to supercharge the budget. So that's the first stage, the continuing service levels. There's never any cutting. The basis of the budget is to expand it every budget cycle based on the inflation factor and the population. That continuing service level, current service level budget, then, which is done by DAS, then goes to the agencies. And the agencies then develop their own budget, taking the current service level budget and then modifying it based on programmatic demands, okay, which usually adds to it. That then goes to the governor, and the governor essentially is the consolidator of all those different agencies' budget. And that's a long process, and certainly the governor then massages that budget, the agency-produced budget, which originates with the current service level, based on political dynamics and strategic imperatives and certainly campaign promises. And then that budget, it's called the governor's recommended budget, goes to the legislature. And that's when it starts the pachinko machine of moving through the Capitol, okay? And each of those little steps is the subcommittee of Ways and Means. So the major agencies have their specific subcommittee. And for example, I was on Housing and Human Services Subcommittee. So any of the agencies dealing with housing and human services would come to our subcommittee, present their last year's budget, results in what they were asking for in the next budget. And out of that subcommittee, we would take essentially a kangaroo court vote, almost always on party lines, and that budget was really generated on the direction of the chair of those committees. As a Republican in the minority, I had zero input to actually what appeared on that subcommittee's final budget. All those subcommittees then feed up to the House Ways and, or the Joint Ways and Means Committee. Joint meaning they have both Senate and House members. And now that's when you get to the real nitty-gritty and the people who are really calling the shots. So all the stuff, in my opinion, below that level is more just for public consumption, to give people a sense that they are really having input with regards to the budget process. But the
You are
people
not
who
helping
really,
us for tomorrow, by the way.
Yeah.
You're not making me feel better.
the people who are really calling the shots in this whole process from the very, very beginning, well, from once the governor has a recommended budget, is really the Speaker of the House, the Senate President, and then the co-chairs of Ways and Means. Okay? And right now, and then the governor is consulted. But, the legislature, it's really the legislature that drives the budget process. And those 4 people, actually this year it's 5 people as an aberration because there's 2 Senate co-chairs, which we can go into the politics of that a little bit. Those are the people who really make the final decisions with regards to the budget. So what that means for you, if you're going to, like tomorrow, to really lobby for something, the key people to talk to, if you can get in to see them, is the co-chairs of Ways and Means, Speaker of the House, Senate, President, and to a lesser extent, the chairs of those Ways and Means subcommittees. Once that budget's put together, then it's voted on on the floor of both the House and Senate, and almost always passes after it gets through that process. Now, there's also a separate process that's related, that's the capital process, which is more a horse trading endeavor, but it is a relatively small portion of the overall budget.
How much? Do you remember?
It varies, but it depends on the bonding capacity.
Okay.
Yeah, there's a bonding cap that the state has.
And that's determined by the treasurer before
Okay.
each legislative session,
So, for
based
example-
on the bonding capacity of the state of Oregon.
For example, most of the money that we have for affordable housing programs is coming out of bonds. So that would be included in that cap.
Actually, it
I-
is. I do know that.
Okay.
It is.
All
So,
right, so
there
go
was
ahead.
one other piece of this thing. So Eileen made a good point. Eileen made a really good point, and that was that the total budget is $76 billion. The general fund is somewhere around $22 billion.
Sounds about right. It's in the
my
20s.
recollection is correct. So that means there's 54-ish or 50 somewhere in that. There's 55 billion that we have no say-so as either as a legislature or as the Oregon people as to what happens with that money.
And that's the law.
Well-
Because we don't trust the legislature to budget.
Well, no, because it's federal dollars. So
Well, federal
it's-
dollars,
it's-
that's true, but
it's-
special
yeah.
use taxes,
No,
which is the
almost
largest
all of
budget.
that delta between 22 and 76 is federal dollars.
Right. And so what it amounts to is, is there any way that we can measure the efficiencies of that other 55 in addition, or, the chunk that we don't have much say-so over? And, the roughly 20 billion or 22, whatever the number is for the general fund is what these taxes, that were on the screen here, are all about. And that's where that's a substantial increase to that. The income taxes and what we pay as citizens in Oregon are going to be paying, and that's where the conversation needs to be. Is, are we being efficient with the other stuff that we have no say-so over, or are some of those costs spilling over and causing problems with our money that we do have discretion over and can direct?
And keep in mind, the state budget portion, that 22 billion, has gone up 44% over the last 3 budget cycles. Let me repeat that. The Oregon state budget that we raise from Oregonians has gone up 44% over the last 3 budget cycles. I'm sure all of you would like to see that kind of revenue growth in your personal wages or your business. And it's still not enough. We're asking for another $5 billion.
Okay, I'm going to move us into the next segment. There's a good
Oh,
exchange.
Jeremy
and-
hasn't
and-
had a chance to talk.
I
Did you
know,
want to say something?
Jeremy,
weigh
if
in
you
on
had
this
anything
section.
to add to that, but I'm going to start off with you on this section. So the deficit issue. I know that you folks have been working with the Central Oregon Business Plan folks. We've, at the Chamber, have been trying to convene this group for the last couple of years, and we've gathered a lot of folks from all over the region just to have these types of discussions and to understand each other's priorities. And Jeremy and his team have been really great resource to making sure that our region is well educated on what are we talking about when we're talking about revenue and why are we raising it. So you folks do a really good job, and I know the rest of you will too, of describing exactly what the issue is here and why we're in a deficit position. So why don't you comment on that for a minute?
Yeah, I will. And just a quick comment to the last discussion, to Eileen's comments about how we raise our revenue. I think the real unique things about Oregon are the lack of a sales tax and the kicker law, right? Those are 2 things that are unique across the country. And the business tax issue really is a function of the lack of a sales tax. Our corporate taxes are not low. Our corporate income tax rate and the amount generated, very similar to other states that have corporate income tax. It's the fact that neither individuals or businesses are paying the retail sales tax, and that is why you
That's
see
right.
numbers showing up that say that Oregon business taxes are
Because when you
low.
look at the corporate
So-
tax rate, I mean, we're like right in the middle.
Yeah.
Like
Yeah.
right in the 20s nationally. It's the fact that we don't have a sales tax is what puts us at 50. So when you start calculating all of the different things, that's how we end up being at the bottom of the heap. Cheaper than Kansas even.
But
So,
it's
but
important
that
to keep
income
important to
rate.
keep in mind, though, no matter what the source, the bottom line is that per capita government spending in Oregon is the 4th highest in the nation. 4th highest in the nation. Now, our median income, I can certainly tell you, is nowhere close to the 4th highest in the nation. And that's what creates so much tension in the state, is because people's wages have not kept up with the cost of living here. And one of the big costs that have been driving up the struggles for everyday Oregonians to live here is the high cost of taxation in this state. And that's
Well,
causing a lot of
housing.
effects.
Sorry to
Housing.
derail because I know the question was about what's going on inside
Right.
the budget driver, so let me talk about that. So the big issues that we're facing as a state, one is our pension liability. So the state, and this is all jurisdictions in the state, local governments, school board, school districts, state agencies, universities, community colleges, collectively owe about $26 or $27 billion in debt to pay for pension obligations that have not been funded.
I'm sorry, was that million or billion?
Billion.
That's over the next 20 years, is that right?
The way we have it set up is to pay it off over 20 years.
Right.
And so that's why you see the rates that local governments, school districts, and the state and universities paying for PERS going up so fast. Because to pay off $26.6 billion over 20 years, every biennium now what you're seeing is billion-dollar increases across government in the amount that goes into PERS. The way that it's paid is as a payroll obligation. So, and it happens automatically. So the PERS board and the actuaries meet, they look at that liability, they say what's it going to take to pay it off over 20 years, and then the amount that needs to be paid in this year by every jurisdiction in the state just gets tacked onto their payroll costs. So those costs historically were about 12% of payroll. Now they're between 20 and 25, and they're going up to above 30% of payroll. And we had $1 billion increase in those costs in the 2017-19 budget. We have another $1 billion increase in those costs in this budget. For 2019-21, we're going to have a $1.5 billion increase in those costs in the 21-23. And this is all assuming that there's not a recession, the market hits 7.2% assumed earnings rate. It doesn't even factor in the fact that last year it didn't. It was, I think, a 0.87% return. So when they go back and recalculate these again, the numbers are going to keep going up. So that is number one in terms of the long-term issue driving budget conversations.
Can we get a little more in the weeds about PERS?
Absolutely.
Because I agree with you. It's the biggest thing that drives our budget. But what we're dealing with is deferred expenses that were deferred starting in 1975. Basically back in the 70s, when interest rates were double digits and our public employees were due a double-digit COLA, for God's sakes, and we said we can't afford it, we will defer this by giving you a sweet pension plan. And so for 40 years, there was some, through Democratic governors, Republican governors, Democratic legislatures, Republican legislatures, we continued to defer expenses.
For the
That is
record,
not
there's
true.
one
Yes, it is.
No, it's not true. So that's a one-off negotiation back in the 80s.
Oh,
when
it
this-
continued
but- yeah, but
over
the-
40 years,
yeah, but
until 2003 reforms.
These are negotiated. There's no promise from 1980 that the same pickup is going to be there.
No,
that
but
was
the
a co- that
Supreme
was- that
Court
was an
has
econ-
already told
no,
us that you
was-
can't change what you've already given.
I'm
The
not gonna-
contract we
I'm
already
not gonna
wrote, we can't
interrupt-
change.
I'm not going to interrupt you. So
Hang
Well,
on.
you did interrupt me,
One at
actually,
a
Newt.
time.
You did
Newt, why don't
interrupt
you
me.
finish your thought, and then Jeremy, I
So
want you to
here's the deal.
conclude.
That was a contract negotiations in the 80s where, exactly right, it was high inflation. It made good sense at that time in that collective bargaining session to amp up the pension payments and not increase pay. But that doesn't mean that that's a agreement that is going to exist throughout the next 40 years, but that's what's happened because there has been this assumption that that is the deal going forward forever. And
It
really
is
can't
not
be
the deal now. As effective 2003,
It-
we changed it significantly, which is why, you know, our problem is over the next 20 years. Because when you make a change, how many people have gone through a conversion of pension to 401k? Okay. You increase your current costs when you do that, right? And we did a partial conversion in 2003. And there were reasons for it, and they look crazy, but when you delve into your long-term expenses and all of that, it does in fact make sense based on what the liabilities were. So we, instead of giving pay increases, we incurred a future liability. That, in 2003, we significantly decreased
Eileen,
that
I'm gonna
future
have to catch up.
liability.
Hold on.
For that
Because
contract negotiation only. It should have reset in the next series of contract negotiations, and it never did. And that's why we
It
have the
didn't
big
until 2003.
liability. No, it didn't even in 2003.
In
Okay.
2003, it did. We have a whole different
hang on,
pension
guys.
plan.
I'm going to let Jeremy finish his thought. Go
Okay,
ahead.
That's a good idea.
But we're
Well,
talking about deferred versus current
Although
We-
this is
expenses.
interesting.
We, including me, could talk
Yeah.
about PERS all day long,
We
but
could.
I think I'm going to go through some of the other drivers in the budget challenge as well. So Medicaid, Oregon in about 7 or 8 years ago, after the Affordable Care Act at the federal level passed, decided to expand its Medicaid program. That was a part of the Affordable Care Act. States could expand their Medicaid program. It was 100% paid for by the federal government up to a certain point, and then it was going to ramp down to 90% paid for by the federal government. We're in that phase of ramp down, and that delta is significant because we added about 400,000 people to the state's Medicaid program, the Oregon Health Plan, health care for low-income Oregonians. And that piece of the puzzle is, you know, between $500 million and $1 billion a biennium as well. And the way that the legislature has been trying to address that the last couple of biennium has been with specific taxes on hospitals, health insurance, and other healthcare related things, but the size of that gap is now so big that those taxes alone are not paying for all of that, and so it's part of this bigger budget issue we face. Some of the other drivers of costs include the health insurance costs for public employees in the state. The state health plans, a very rich plan, and school district plans also are seeing significant cost increases. And so the state is, 60% funder of public schools, and as both the PERS costs and the health insurance costs for employees in the school district goes up, then that diverts more money, and the state employee health insurance costs as well. These are some things we're facing right now. Obviously, there are also, a lot of people, a lot of interest groups that believe that there are just other unmet needs in the state related to housing, related to human services. We know we've got foster care issues and other things, and so there's a lot of other issues out there as well as these major budget drivers that people, want to have a conversation about as part of the state budget. And then in the long run, there's going to be others that really aren't even on this radar right now. We've got long-term care costs. Those are going to be very substantial and growing with an aging population, and will, probably become on par with some of these other issues we're talking about now in terms of a challenge for the state budget. And so those are some of the things that, and then the general desire to improve our education outcomes. And there's multiple ways of getting at that. One is to help reduce these other costs that the schools are facing so that more dollars can pay for the outcomes that we all want for our students. But there's also a desire to put more resource into schools overall as well. And right now, the legislative conversation is around an additional $2 billion in state funding per biennium for K-12 schools. And then, of course, we've got our higher education institutions who are facing these PERS, healthcare costs, and other cost drivers. So they're raising tuition, and the state is sort of a backstop against that. So all of these things are happening and sort of driving the conversation around it. And then, of course, there's some other issues that don't have anything to do with paying for these challenges. They're just new things that like the carbon tax, right? The carbon tax isn't going to pay for a deficit in an ongoing service. It's a new thing designed to reduce carbon emissions, but it's still a tax that would be part of this mix and cumulatively affecting all those who pay it, and the same thing with paid family leave.
Wes, you look like you want to say something.
Oh, no, I have plenty I could say.
Go ahead, and then we're
So-
going to go to the next section.
One of the things that is a very interesting component in this is it doesn't seem like in the budget setting process or the drivers that push toward asking for more revenue is that there is not doesn't seem to be a robust conversation about what is the cost and what's the ROI, the return on investment that we've got in any program. Instead, it seems like a program takes on its life of its own, and then it gets into this budget cycle, and it just grows. And there's not a discussion about, okay, are we getting the value that we are looking for out of any particular service or any particular program that we're either adding or reviewing. And that it doesn't seem like the budgeting process has anything to do with that. It just seems like all we ever do is add stuff on rather than review what we've got and figure out whether or not, something needs to stay, go, change, merge with something else, do some other way to do cost containment simultaneous with reviewing what we need for revenue. Right now, it just seems like there is a bent to just keep growing everything without really trying to, assess what we're really buying. Because it's all of us in the public that are paying all this stuff. And, do we ever get to weigh in on what it's really adding value back? And I don't know, that just seems like it's a lost thing in this whole conversation.
Well, you would think that the way we get to weigh in on that is through our elections, particularly through our legislative election. But since we have a part-time legislature and a full-time agency, how much oversight can the legislature really do, especially if you're, if your legislature is not full of people that have a financial background? I'm never going to argue with you that there's not waste in government because I'm a controller. I mean, there's always waste. There's always savings. There's always a way to do it better. But we have an essential problem that we've got a part-time legislature that gets a big $24,000 a year plus per diem. And Newt can tell you that the per diem is because he has living expenses, maintaining a house here and a house in Salem. Are we attracting the best talent in Oregon to solve these really hard problems when that's what we're paying them?
Okay. Newt,
Well, I'll
close
just
this
chime
out,
in on
and then we're going to segue.
those two comments. I think both Eileen and Wes make good points. Wes is right. There is way too much focus on the inputs and not the outputs, meaning there's a focus on the resources that going into our state government and very little emphasis on actually what are we purchasing, what are we getting in terms of outputs for that. And we need more resources, certainly in the legislature, to look at outputs, to audit agencies. I differ, though. I don't think we need a full-time legislature. We need to be able to buy very talented audit services that can go and do a deep dive into some of these major multi-billion-dollar organizations that make up the state government. You can't expect a state legislator, even if they're full-time, to have that expertise and that knowledge to be able to dive in. But we do need to allocate a lot more dollars to a robust audit process that we don't have right now.
Thank you. Okay, I'm going to have to move us on. Sorry, otherwise we're not going to have to get time to get into the meat. So, going to kick this off with a few of the bills that I've got here on my list that I really want to talk about tonight and share with you. The first is, and Jeremy, you alluded to this, on the table right now, healthcare tax, House Bill 2269, gives the Oregon Department of Consumer and Business Services the authority to determine what every large employer, defined as 50 employees or more in the state of Oregon, who work an average of 8 hours per week, not day, per week, should be spending on health care. So this is a bill that says we don't know if you're providing enough health care coverage, and so we're going to evaluate that and then charge you a fee to increase it. So let's start with that. Does anyone have, perhaps you have insight, Jeremy, you might, on that particular bill?
Jeremy, go ahead.
Yeah, so this goes back to the Medicaid issue I talked about, right? Like the last session, they passed hospital tax increases and they passed an insurance premium tax, which you all are paying now, to help cover that gap in the financing of Medicaid. The gap's grown. They reinstated those same taxes and raised them, the ones they passed last time, but there's still more gap. And so they're trying to come up with ways to fill it. And this idea is to say, all right, if there's an employer out there who isn't providing health insurance or enough health insurance, according to the state agency, it gets to decide, we're going to do a head tax on them for all their employees and put that into a fund that then helps pay for Medicaid and allows more people to access Medicaid.
And they had, they are expecting a $500 million per annum raise for this particular bill. $500 million, one bill.
Yeah, and so one of the most unique things about it is, so employers have spent a lot of time trying to figure out how to comply with the rules around Obamacare, and I'm not using that word pejoratively, it's just what it's called.
Actually, it's called the ACA.
The
ACA works, yeah.
The
ACA.
The Affordable Care Act. But that had a 30-hour a week requirement, right? So the rule was if 30 hours. So a big change here for the state plan would be if you have an employee working even 8 hours a week, then and if you're not providing insurance or enough, then you'd be. So a lot of employers are raising concerns about, hey, I offer insurance and people don't want to take it. I have part-time employees that, 8 hours, who really do only work a few hours a week. So a lot of concerns about the tax and the responsibility of employers to pay this additional tax, as well as just of the mechanics of how the heck this thing would actually work. So
Thank you for that overview. I want to go next to the variety of business taxes. I want to spend some time on this because each different idea has some very important nuances to this. So a commercial activities tax versus, say, a gross receipts tax. Who wants to take on explaining the difference between the two? Wes?
I might actually start because I'm like I'm right in the middle of this.
Go ahead, Jeremy.
There really is fewer types of taxes than it sounds like. It's just a lot of different acronyms. So the debate's really coming down to either a gross receipts tax, a value-added tax, or some hybrid. Okay, and the CAT, which is the commercial activities tax, is a gross receipts tax. And it's a single rate gross receipts tax modeled after Ohio. And what the legislature is looking at right now is around 0.37% gross receipts. So all of your Oregon sales would be subject to the tax, no deductions, just gross sales. And it would apply to all business entities, pass-throughs, C-corps, everything. You'd start paying the rate if you're over $1 million in sales. And if you're below $1 million in sales, you'd pay some sort of flat fee. Right now, they're talking about $250. So that's one option. Another option, and one that we actually suggested, knowing that this debate was coming and there was likely to be a significant business tax increase, we spent a lot of time working with economists to come up with what we thought would be the most rational, economically sensible way to approach the issue. And so we proposed the idea of a value-added tax, and that would be your gross sales minus your purchases from other firms. And the difference there is that you subtract out all your purchases from other firms, and so you don't have the problem of pyramiding. With a gross receipts tax, the full value of the sale is taxed at every step in the supply chain. Therefore, if you're anywhere other than the first step in the supply chain, you're paying the tax and the increased cost of the predecessor as well as they are, and it stacks up. So we didn't propose that because we agree that $2 billion is the right number that the legislature should be raising in a new business tax, or we have not agreed to any type of thing other than if you're going to have a conversation about a new business entity tax, this is a more rational way to go about it. I think what we're seeing happen now in the legislature is a desire to come up with some political compromise between these two types of taxes. What's not clear is that if you can really make a political compromise out of an economic policy, I mean, these are two distinct policies with reasons for, economic reasons and functions. And so I think what they're looking at now is maybe, okay, a little bit higher rate on the CAT, the gross receipts tax, but then some ability to deduct purchases from other firms, or some ability to deduct labor, some portion of labor costs. So a proposal that's being reviewed right now is 25%. So the gross receipts tax rate's a little higher, 0.45%, but then you could deduct 25% of your business inputs or your labor costs. So every day, if you want to tune in to the legislative website and watch the Joint Committee on Student Success Subcommittee on Revenue, which meets every other day, every meeting they're sort of having these conversations, and a new potential concept and some modeling of that concept is being thrown out. But it sounds like they're starting to settle in, and what we've heard is that as early as Thursday of this week, they may pick one of these, and it would likely be the CAT or the modified CAT with
With the VAT?
but not the VAT. I mean,
Not full VAT.
I don't think they're going to go to the full VAT.
And, I mean, the problem with, here I'm going to agree with Jeremy. The problem with the gross receipts tax, of course, is that different business models have different contribution rates, right? I worked for a company that had a 95% gross contribution on their product at one point. Whereas, you go down to Kroger and they've got, 4% gross, and then they pay the rest?
1% lower.
So, so that's a good recognition of that. That is a European model, is it not?
Most other countries use it. I think one of the challenges we face on it is that it isn't used by states as much. But if you ask any economist what's better, if you're going to raise the same amount of money, is a gross receipts tax or a VAT better? They'll tell you that a VAT is better.
Is that because it doesn't influence the supply chain?
Yep.
And doesn't aggregate costs up through the
It
whole
doesn't
food chain?
incent, the aggregation of costs creates perverse incentives. It creates an incentive to do in-house provision of services, vertical integration, creates competitive advantages and disadvantages based on the structure of supply chains. And the VAT eliminates that by allowing the deduction.
But let's be clear, no matter if it's a VAT or a gross receipts tax or whatever kind of corporate structure you want to create for the tax, at the end of the day, corporations don't pay taxes. Okay, that is the great fallacy of this whole discussion. At the end of the day, corporations don't pay taxes. They'll pass it on to their customers. They'll cut pay and benefits of their employees, or the owners will have less disbursements.
Except if you...
So please don't interrupt.
Go ahead.
That is, at the end of the day, who pays that tax? It's either the employees, the customers, or the owners of the business. Corporations don't pay taxes. So essentially, the state of Oregon is going to extract another $2 billion from people who are already paying a very high rate of state taxes per capita. And to highlight what Wes said earlier, that output, what we're getting for those dollars is not high value right now. We see it with regards to our schools, one of the worst graduation rates in the nation. We see it with regards to taking care of foster kids. We see it with our lagging infrastructure all across the state. And that's what makes people so upset. We're paying a very high rate of taxation, and we're just not getting the value for those dollars.
Thank you.
But
So,
if you believe in the free market, and you believe that there are smart people out in corporations like me whose job it was to control costs, we have social costs in our economy. I mean, what we pay is a combination of what we pay for our goods and services and what we pay for the social costs. And government's job is to allocate those social costs. In my experience in business, my company was a lot better at handling those social costs and minimizing them than putting it out on the individuals. And we can talk about that more when we get to the carbon tax. But, you know, there's a foul, I mean, you're right. We all pay the taxes. We also all pay the goods and services. But you can't say that, oh, well, we'll reduce taxes and not expect there to be some increase someplace else in our life.
Eileen, I got to move us on.
Go ahead.
Thank you, though. So I do want to talk quickly, if we have time, about the kicker, and then cap and trade. Let's do cap and trade first, because it's a little meatier and complex. So this is a $1.1 billion increase, and it's mostly applied to about the top 100 emitters across the state. We have a few in Central Oregon, not a lot, but there are pass-throughs for gas, for your electricity, that sort of thing. So ratepayers are involved here, and that's us. Who wants to take on explaining a little bit? And Newt, I actually, if you don't mind, I'd like you to lead off with this, because this is a piece of legislation
Let Jeremy
that's
lead
been
off.
around a long time.
Jeremy, you want to take this, and then I'll pile on.
I'll just quickly
to you.
describe what so, you know, it's a cap. The idea is you cap carbon emissions. And, you know, the goal is to get to 80% below 1990 levels by about mid-century. And so they figure out what's the price, you know, what's the cap, you know, whether that's the cap, but then what's the price of emitting carbon that will help us get there. And so, you know, they set up that limit, and companies have to apply with the limit, and they can purchase, you know, there's an auction for carbon credits, and they can purchase or trade those. But it applies to, you know, larger emitters, and really what it ends up being, because Oregon has already done quite a bit in this space as it relates to our electric utilities who are on the path to, you know, being off of coal and mostly on renewables, it ends up being a major transportation fuel tax and a major natural gas tax, right? It's also a tax on the industrial emitters, but, you know, there's a lot of conversations going on there about how to structure that. But so if you're following the news on it, I think the big news is, okay, well, at the end of the day, this is a major increase in natural gas costs. It's a major increase in transportation costs. And so it isn't, you know, it's a business tax. Businesses are going to pay it. Large emitters are going to pay it, but it's also, you know, a tax on consumers for their use of transportation and energy. And then the money generated from it, some of it would be spent for green energy projects, some of it would be spent for low-income communities are impacted by the higher prices that they're going to have to pay. And, you know, frankly, a lot of it will probably be spent to sort of, you know, buy off people complaining and try to figure out how to get the votes to pass it.
So let me just highlight a couple things that Jeremy said. So the largest emitters in the state of Oregon in terms of carbon production is not what you'll see in the commercials where it's a smokestack of some bad industrialist. It's actually all of us sitting in this room. Transportation is the #1 producer of carbon emissions, followed closely by our houses, heating our houses. So when you start talking about who's going to pay this, it's going to be mostly individuals through a 16 cents a gallon, a 16 cents a gallon increase when you go to the pump, okay? And I don't even know what the natural gas increase, but it's pretty substantial.
Yeah, it's pretty significant.
So you'll see that on your home heating bill. Now, that will generate, at least the version that I saw when I was in legislature, and I think the latest, about $1.1 to $1.4 billion. Okay? Now, that would be great if those dollars are going to our schools, which have been underfunded for a long time. But no, those billions will not go to our schools. It's going to the Department of Environmental Quality, where unnamed bureaucrats will allocate that $1.4 billion to green energy products, to credits, like Jeremy said, to people who are trying to clean up their production. Now, that process should all feel very familiar to y'all because we did that in the past with a similar scenario called the Business Energy Tax Credit Scheme, which was a total disaster. to the extent that there was corruption of similar bureaucrats in the Department of Energy that went to jail for corruption because they were selling these credits at cut rate deals to their friends. Now, why we want to repeat that process again, it's just beyond me. And there is a much better solution here. We should try to cut carbon emissions, don't get me wrong. But the best way to do that is just a straightforward carbon tax, okay? And it's much simpler, much less prone to having the machinations you see with regards to selling credits on a trumped up marketplace.
So I do believe that the one change between the former version and today's is, Jeremy, correct me if I'm wrong, but it's not DEQ that's going to be the administrator, it's a new office. Correct?
I believe
Yeah.
that's correct, yeah.
Yes, and it's just not coming to me. I'll look it up. But yeah, but it's the same thing.
It's a bureaucratic.
Okay.
Right,
It's a climate change committee, I think,
Right,
in the latest
right.
version. Yeah.
Now,
Okay.
can I speak as somebody who comes out of the automotive industry and has been dealing with this? So as a controller, I went through 4 EPA standard changes. And the first 2 were a bitch. No kidding. Our costs went up, the customers' costs went up, the power of the engines went down. We were selling a worse product for more money. But this is what allowed the entire industry to embrace SCR in EPA 2010, which was also a cost increase on the purchase of the truck. However, the fuel economy, the power of the truck improved to outweigh the cost of the increase. The total cost of ownership into trucks went down. And to such an extent that when we introduced 2014, previously customers would pre-buy so they wouldn't have to pay the extra amount. Our customers held their buys for 2014 engines because the total purchase price was higher. Total cost of ownership went down. That's because companies are good at controlling costs. The only carbon tax won, it got the Nobel Prize for a good reason. And that's that in a capitalist society, we are motivated by profit. We are motivated to control our costs and make more money. So by giving the costs to the experts, like the engineers in my company, we were able to control those social costs so much better than the government could pay to clean up our mess. So if we do carbon tax correctly, it's not a major money raiser. It is providing the incentive for innovation. Because government can do carrots and sticks. And the business energy tax credit shows us that carrots do not work in this area. We can't afford the frickin' carrots. By providing a stick, this is giving a level playing field to the market to provide the kind of innovation that drives our economic growth. My company was more profitable after 2010 and 2014 than it was prior to, because we embraced the innovation.
Okay.
Well, let me just
So-
chime in. So it's very important. Eileen's right. It's very important to have a level playing field with regards to these kinds of taxes. But this does exactly the opposite, because manufacturers in Oregon will be saddled with this cap and trade scheme, which will cost them billions, and a company across the river in Washington or in Idaho will not have it. And the competitive disadvantage for manufacturers in Oregon will be substantial. If you're going to do a complex cap and trade or a carbon tax, it really needs to be done at a national level so it's a level playing field throughout the entire country, or Oregon's manufacturing base will continue to be devastated.
God, I'd love to see this happen at a national level, but if we sit around waiting for the federal government to save us, we are really in a hurting place.
Okay,
Let's
moving on.
Let's just create more
Moving
homeless
on.
in Oregon then.
No,
Okay,
we can
folks.
lead. We can lead.
I've got to cut you off. I hear all of that you're saying, but we're running out of time. Just want to mention the last thing here tonight was the kicker tax, and they're proposing a $108 million cut to change the kicker law that is on the books now, that returns all the I'm going to screw this up, but the money in the budget that was not allocated originally, additional revenue that we raised beyond it. Fair enough?
Yeah, that's fair enough.
Fair enough. No, go. Why don't you explain it
Wes,
really
you
quick?
go.
Okay, so the kicker was originally, it was actually an initiative petition that went through and modified the Constitution that if the state collected too much money, it couldn't keep it all. And the only money that this affects is the general fund, the thing we started talking about when we first walked through the door tonight. So there's an interesting thing that the general fund does, is that nobody actually really truly knows how much money is going to flow into the general fund, because it's all based on what we pay in personal income tax. I mean, that's the vast, vast majority of it. So just to put it in perspective, Newt made a comment that, you know, the budget had grown 44%. That is right on par with how much additional personal property tax the state of Oregon has collected over the last couple of bienniums too. And there is a similar increase this go around. So what it was intended from the get-go, and it was passed a long time ago, but it was intended to do was to say, okay, Oregonians, you're doing great. You've earned a whole bunch of money. Here's a little rebate back for what you paid in taxes. All of our services are funded, and here's the extra back. And that was kind of a happy time while everything was working fine. And now that there are more and more demands on revenue, which is our tax dollars, now the state wants to keep more of it, you know. And it goes back to that same conversation, is it our money or is it, you know, the state's money? And that's what the kicker law originally was all passed around. That was all of what we voted on way back when. There was a lot fewer of us in the state when we passed it, but that was what the whole gig was about. This modification is just capping it in effect. And that's where this $108 million comes from, is it just caps the kicker at a little bit lower threshold than what the current rules are set around. So,
Thanks. That's very helpful. What I'm going to do now is move it to you. And first of all, I hope you guys don't get too depressed tonight. It's sunny outside, man. It's not raining anymore. And you came here. I'm so grateful. Thank you. So I see somebody's hand up in the back. And will you state your name, who the question is for?
James Cook, and I really don't care who answers. You talked about return on investment, but as an Oregon taxpayer, I have no way of knowing what my return on investment is, because our tax system is so complicated that 4 smart people up there can't explain it to me. So, and it seems to me that benefits both political parties. If you want to, why are you not asking for a simplification of the system so I can understand the taxes I'm paying, rather than hiding behind, I want to lower your taxes or I want to do something nice for you? Why is there no drive for simplification?
So you know what's really interesting about that comment is Oregon actually has a flat tax. I mean, it is a flat 9% tax, 9.9 if you get above a certain threshold. And that tax rate, the reason why it comes out as high as it does is if you were in our neighbor to the south, that 9% tax rate doesn't kick in until about $350,000 of taxable income. In Oregon, it kicks in at $10,000. So the bottom end of this whole thing is the middle chunk of what we do as Oregonians. All of us that are middle class pay a relatively high percentage, and it is a flat tax based on our federal rules.
Right.
With one exception. When we reconnected back in the short session in 2018 to the federal code, we didn't really fully reconnect. What we connected with is all of the limitations on deductions and none of the breaks on the top line. So, and I can say this because I've got about 500 tax returns under my belt right now, including my own, where I took my exact 17 numbers, plugged it into the 2018 tax rolls and the tax software. My federal bill went down 15%, and my state of Oregon bill went up 25%. And that is, when I saw that, I was going, ooh, I wonder what that's going to mean for the rest of my clients for the rest of tax season. And that has held true through all of this season, is because of the limitations. The limitations are on our itemized deductions, and that's the stuff that you talk about that is the complexities that are in the code. Oh, yeah, yeah.
Well,
That's it. Yeah. Right.
So here's why that's the case. It used to be that as a community, when we wanted to buy something new or pay for something, we would talk about, us all contributing to it. Now, because of the politics, even though we end up all contributing to it because carbon tax raises your gas prices, or because a CAT or a VAT raises your prices at the grocery store or whatever, we call it something else. We pretend like it's only affecting a narrow group of people because they're politically unpopular, and and that's sort of the approach of the legislature. And so every session, we're going to use this tax to pay for this tax to pay for this tax to pay for that, and it's all targeting businesses of different types. At the end of the day, everyone's paying more, just like you would have if they raised an overall sales or income tax, but it's not politically feasible for the legislature to raise an overall sales or income tax, and so they go at it this other way, and every session it gets more complicated.
Mm-hmm. Our lives would be easier. Okay, first of all, the three things we all love about living in Central Oregon is the mountains. We don't have to pump our own gas, and we don't pay sales tax, right? But not having a sales tax actually causes a lot of problems for us in the long runs. And puts a lot of burden on people that are at the lower end as well. There are ways of doing a sales tax that doesn't kill people at the lower end of the model, but they're not easy to explain. And you also have that initial, but a sales tax. And not having a sales tax is one of the problems of having an equitable and sustainable revenue system in Oregon. We aren't getting the money from the tourists. I don't want money from the tourists.
Newt, anything?
No.
Okay. Right. I have another question from the back.
Sorry, I'll step around so you can see me. So my question, I think, is related to zeroing in your numbers related to 80% of the income taxes coming from individuals. So I am an individual taxpayer here in Central Oregon. I own a business. I employ 25 people here in Central Oregon, and I pay my taxes on my personal income taxes.
I did
so
too.
What Wes is saying regarding the impacts of some of these things on small businesses like ours is a greater example than your example regarding Nike. I'm not discounting that those things need to be adjusted, but there's a greater number of small businesses like ours that are impacted by the decisions that are being made. So my question, I guess, is more related to the group, and whoever wants to take it can take it. But when are we going to have a reasonable conversation on the impacts to businesses that represent a vast majority of Oregon businesses like mine, and what that means? Because for you as a business owner, Eileen, you could control it by lowering your costs. I will have to control it by lowering benefits or laying off employees. So when can we have a real conversation about the vast majority of businesses here in Oregon that are impacted by this, and not by examples of huge corporations that may be getting tax cuts that don't represent the majority of us?
Okay. We also, we have to have a conversation about, the market. I've talked to a lot of small business owners, particularly people that have fast food, and what they're able to balance. and they can't get people to come and work for them. I mean, we have that problem in a lot of our small businesses here in Oregon. I have a friend who couldn't get enough people to work for her, and she actually cut back the size of her business. So it wasn't just that, she didn't actually lay anybody off. She couldn't hire people in order for her to maintain the business at which she wanted. And a good chunk of that is based on what it costs to live here. We have, as Newt said, we have an imbalance between the revenue that's available to individuals to participate in the marketplace and what it costs. And it affects our small businesses more than it does a corporation. A corporation can float through cycle changes, and small businesses can't. But who has the greatest effect on our tax laws? And it tends to be very large corporations that are watching for their own interests, not for small businesses. So, you're absolutely right. We need to have a separate tax code for small businesses that file on their personal taxes. It needs to be different than the way that we treat corporations, because what you face is different.
I hope you're going to the chamber lobby day tomorrow, because I think, the dirty little secret is that every politician says they love small business, and every session what happens is pile on more and more challenges to doing business in the state, and they get away with it by saying it's the tax on Walmart or whatever, when that's not the case. And so there's these false facts about how much corporations pay being used to, and then using examples like Walmart or whoever's unpopular to say that's why they're passing a certain policy, but it's affecting you and everybody else. Mm-hmm. And politicians still say, hey, I'm a small business, legislator, but all of these policies are creating way more of a burden for the small guys than they are for the big guys.
And a great example of that, Jeremy, is the health insurance tax. So, started off as 1%. They just increased it to what, 1.5%?
It's 2 now. It started at 1.5, now it's 2.
Started at half, now at 2. And of course, who pays that tax? Small businesses, school districts. You know who doesn't pay that tax? Big self-insured corporations and unions. So, you can talk about being, a lover of small businesses, but, the facts are that the people who are making the decisions and saying right now are hammering small business. And they're creating a cost structure in this state that makes it very difficult for small businesses to thrive and for individuals to live here. Because the cost structure has just outpaced markedly the growth in wages. And that's why you see so many businesses and people under pressure just to pay the bills every month.
And you also have well-meaning, you have a tax credit meant to help a small business, and, a corporation like mine has 6 tax attorneys who can drive a semi-truck through it.
It's not very complex
there
when
needs
you
to
pass
be
a tax on small business and you exclude big self-insured employers. You don't need a very sophisticated corporate lawyer for that.
Well, except you also have to think, if your goal is to make sure that people are covered at the lowest possible rate, when a company self-insures, it's actually participating. It's not paying somebody else to do it for them. I think one of the questions I have is, since large companies do self-insure because it's the cheapest way to handle it, why doesn't the state self-insure? Why are we paying other people instead of using our own product to insure our employees?
Okay.
It's a big company would do that in a heartbeat. Anyway,
Bring
sorry.
it back.
Off
Wes,
track.
did you have something to add to that? No. Okay. So anybody else out there brave enough to ask a question? So I'm going to take a quick pause here. In the back corner are copies of the Chamber's legislative handout. We're using this tomorrow when we go to chat with legislators. You'll find a lot of really cool positive things in here about some of the things we're trying to achieve with OSU Cascades and some of the other initiatives, but it also speaks to this issue that Central Oregon is made of small businesses. That's who we are. And the cumulative impacts of what's going on is a burden. It's very real. We don't have exactly the solution, except that you can't have all the taxes that you're proposing this legislative session. And we will be having a talk about that with our delegation and others tomorrow all day long. If you have a burning desire to just keep going with this conversation, let me know. We have some spots left on the bus. So I have one last question to close this out. And Wes, I'd like to ask you first, advice to small business owners, and, well, everybody in this room, members of the chamber. What should you be thinking about or preparing for as a result of some of this legislation?
What I find fascinating is usually the people who find out last about whatever is getting passed or considered is the folks that are the busiest, and those are the folks that run small business. Everybody's got their head down, tail up, trying to make things work. And actually I won't take credit for this because this is a comment that Katy made to me at one point. Now is the time that small business needs to be engaged in the conversation. And so to the extent that we can get over there and be able to say something in front of our representatives, and particularly, like what Newt was saying, if you can get in front of the folks that are setting the budget, then there's a possibility of making some impact. It's pretty onerous to run a business every day and then turn around and then have somebody tell you that, oh, by the way, you're going to have a new, whatever it is, medical leave, pick your tax, and now your costs are going up. Because, Eileen, the people who have made those conversions from DB plans in business, they did one thing that was really important. They froze every one of them. And then they made their cost conversions. We didn't do that in this state.
No, because we still
changed.
have a hybrid, yeah.
Yeah,
We still have a
so-
pension plan going. We
so-
only partly went there.
Yeah. So the point is that, if small business is taking on additional burdens every single day with, new rules, new regulations, new whatever it is, every one of those layers on, and it's a death by 1,000 cuts. You end up with a whole bunch of little things that add up to a big deal. And, the only way that we can get the message out is get in front of folks and be able to say something.
Newt, do you want to
High
add
five,
something?
Wes.
I'm going to go down the line. So Newt, I'm going to
No,
ask you to
I just
comment.
give you this last take-home thought is, the underlying problem here is we have three big cost drivers in the state of Oregon right now that are growing uncontrollably. And if you don't think that's the case, just look at the experience where we've had a 40% increase in the state budget over the last 3 budget cycles, and it's still not enough to keep up with these cost drivers. And the cost drivers are these 3. PERS, increased pay and benefits for our government employees, and then the Affordable Care Act. And we have to bring those costs under control, because my fear is that we've seen robust growth in our economy, historic levels, and that's not going to continue. So when that revenue growth subsides and those cost drivers keep on escalating like they're projected to do, we're going to have a very, very difficult time.
Thank you. Eileen?
Yeah, I just wanted to tag on to that PERS, and I want people to understand that we can change the pension plan. I mean, there's a market price of what it costs to hire people. Some of it is current expenses, some of it's benefits, some of it's deferred expenses, right? And the problem that we're in is we deferred expenses till, now. If we change the pension plan to employees, which we can do, there's a cost involved in doing that. Both, what do we have to give them in salary since we're not giving them that? And also, what does it cost to replace employees? The 2003 reforms were absolutely necessary, and we lost thousands of employees that year. So, it's turnover costs us. We know that, okay? If we change the plan, we still owe $25 billion that we're going to have to pay over the next 20 years. We can change all kinds of things. It'll help us 20, 30 years from now because we won't be increasing our liability. We still owe $25 billion over the next 20 years that we've got to pay. And it sucks, and we have to do it.
26.
26. I'm
Okay,
being
and
optimistic.
Jeremy,
Yeah.
your last thoughts?
And I have three things to leave you with, but first, I just to that. The solutions are out there on PERS. You can, without changing benefits, employees can start contributing to their defined benefit pension. If employees put 6% of salary into a defined benefit pension, $1.2 billion per budget cycle that employees would be paying into their own pension rather than the school districts and the employers around the state that have to divert it from the services that
Except
then they
we
go
took that out specifically
taxes.
Eileen,
because of
hang
money
on,
match.
hang on. It's Jeremy's turn.
Specifically
It's
because of
I
money
know, but
match.
I know.
That was deliberately done
Right.
to
Wrapping up.
prevent our long-term
But the three
liabilities.
things I would leave you with overall, show up, right? The reason why they do a lot of things because I don't think people are paying attention. So show up. 2, don't let yourself get used. As we talked about earlier, everyone says they love small business, but then they pass policies that aren't always in your interest. So don't let, if you have an opinion of small business, let them know. And 3, demand the cost reforms because, look, there's going to be increased taxes, and there probably needs to be some to pay for education, but not the level they're talking about. And if they don't do the cost reforms that Newt was talking about, this is going to be going on for the next 20 or 30 years, going to keep raising the taxes, and we're actually not going to get ahead in terms of getting the services and the outcomes in our schools that we want. So as part of your message, make sure you talk about these cost reforms, and when people tell you that it's not legal, push back, and if you need talking points or support on why that's the case, we have them, and we'll provide them for you.
I want to thank every one of these panelists tonight. They provided some great perspective. Some of them have driven quite a while to be here, and really grateful for your expertise. Thanks to each of you. Can you help me welcome? Thank them. All right. So thank you again for coming. Next month, just a reminder, we're going to have unicorns and ladybugs and fun things. I'm kidding. Happier thing to talk about, innovations and creativity in financing and construction and the ROI on housing for our workforce. It's going to be a really interesting discussion with people from all over the state and elsewhere. So I hope you join us on May 14th. Have a great evening, and thank you so much for coming.